It's been a volatile stretch for the NASDAQ. It's on pace for its fifth down week out of the last six. Joining us with a technical look at the markets is Craig Johnson, Chief Market Technician and Managing Director at Piper Sandler. Craig, you think that the long-term kind of move will be up with stops and starts, I guess, but it's bumpy. What are the macro factors before we get into the individual names that you see in the charts?
Sure. And Becky and Joe, thanks for having me on the show. I think the macro factors that we got to pay attention to is, first and foremost, we got to pay attention to interest rates. I mean, there's clearly a change that's starting to happen on the interest rate front. And from our perspective, we could see rates continue to keep moving higher through this year. Originally, we've talked about 150, 175 on the 10-year. I think that's probably going to prove to be a bit low. And I think we could potentially see 10-year bond yields move up toward, again, in an orderly manner, up toward about 2%. But, Joe, when that does happen, what we're going to probably see is this sort of compression. These higher multiple stocks are probably going to come down in valuation. At the same point in time, you're seeing earnings moving up. So you end up with a market that could be a little bit stuck, and you may need to consolidate sideways. And that's kind of what you've been seeing with a lot of these NASDAQ names, the FANG names, AA to be specific. You point out the path of least resistance is up. And we were talking about this earlier. Unwavering fiscal and monetary policy should help absorb the rise in rates and other speed bumps. Correct. I continue to think that we got the Fed still very accommodative. I don't see them raising rates anytime soon. We continue to see more fiscal spending happening coming out of Washington. Big package just got approved. We'll probably see some infrastructure spending potentially coming. And between those two pieces, there's a lot of money in this system. And I think just trying to keep it simple, looking at the charts, keeping it simple, the primary trend of this market still remains higher, but we are getting this sort of rotation internally in the market as interest rates are starting to change. So we're going to get some speed bumps, setbacks along the way. But I think the market still is going to work its way higher toward our year-end objective of 42.25.
Shepard Smith here. Thanks for watching CNBC on YouTube.